Hey everybody, welcome to another training video. I'm John Bowens with Equity Trust Company, and we're going to be providing another Equity Trust client case study talking about how an investor here at Equity Trust is investing in real estate with her self-directed traditional IRA and now her self-directed Roth IRA, and she is fully embracing the concept of compounding interest in the absence of taxation. She's done over 20 real estate transactions, and we're going to show you how she is producing over $60,000 in net tax-free cash flow on an annual basis in her self-directed Roth IRA. Before we get to the whiteboard training, I encourage you to subscribe to our YouTube channel so all of our additional training programs we can make sure we send right out to you. So let's go ahead and get right to the whiteboard and talk about the Equity Trust client K. All right, so now that we're at the whiteboard, we're going to go ahead and jump right into Kay from California. Kay has a very interesting story. She came to Equity Trust Company approximately 4 to 5 years ago. She was a retired or near retirement speech therapist, and she had a 457 and 403B account. Now, for those of you that aren't familiar with a 457 or 403B, it's very similar to a 401k, which many people are familiar with. But depending on who you work for, if you're a teacher, or you work for a hospital, a nonprofit, a government agency, you may have a 457 or 403B instead of a 401k. For all intents and purposes, these are qualified retirement accounts, and once you leave your employer or you meet a certain eligibility requirement, and there are certain requirements that have to be met, you are eligible to roll the money over into a traditional IRA. So this was Kay's first step, is establish and fund her traditional IRA. For those of you that aren't familiar, a traditional IRA is a tax-deferred account, tax-deductible account, meaning when all of the monies were being put into the 457 or 403B, she was ultimately getting a tax deduction for it. So when she rolled it over, the natural progression was roll it over to a traditional IRA. Now, very important to understand that when Kay rolled over her 403B and 457 into a traditional IRA, there were no taxes or penalties. She was simply moving from one like account to another. Now, once the money was in the traditional IRA, you're going to learn a little bit here that what she started to do over time was convert those monies into a Roth IRA. So at the very top of this whiteboard session, it's important to understand the difference between a traditional IRA and Roth IRA. With a traditional IRA, your growth is tax deferred. So as that tax deferred growth occurs, eventually when you take money out after the qualified retirement age of 59 and a half, whatever amount you distribute, you pay taxes on that amount. In contrast, a Roth IRA is funded with after-tax dollars. And in some instances, as you'll see in the case of Kay, she converted money from a traditional to a Roth, getting the taxes out of the way, and now going forward, all of her profits are 100% tax-free. In fact, she's got over $60,000 in net tax-free profit coming into her Roth IRA with multiple rental properties she holds in her Roth IRA portfolio now. Kay has done well over 20 real estate transactions. She has bought properties through tax deed sales. She's bought individual properties. Many of these properties, if not all of these properties, in fact, are in the state of California in her local real estate market. And many of the houses that she's acquiring and fixing and flipping are properties that are under $100,000 on the purchase price. So let me go ahead and jump into deal number one, if you will. Obviously, Kay has done well over 20 real estate transactions, but she had to start somewhere, right? And for those of you that are a little bit newer to investing in real estate, I think it's important to understand that, hey, everybody's got to start somewhere, right? We got to start with deal number one. We got to get deal number one under our belt. So Kay, deal number one, she bought a property for $51,000 in California. Her IRA funded the $51,000 purchase. It was her traditional IRA that she had set up at the time that funded the $51,000 purchase. In just a few minutes here, I'll talk about how she went through the Equity Trust system in order to process the investment, have the money sent out the door, pay for all expenses, and then ultimately have the return of the profit flow back into her IRA. So just sit tight for a moment and we'll go through actually how she did this. From the numbers standpoint, bought it for $51,000. She had general repairs, paint, carpet, things of that nature, minor fixture replacements, lawn maintenance, water, appliance, and then of course taxes, insurance. So she had utilities, her carrying costs, taxes, insurance, some general repairs. It was a very light rehab. She was in it for $51,000 on the purchase, put around $2,700 worth of repairs into the property. So she was in it for, all in, her investment was $53,708. This was under a 6-month buy, rehab, and resale. She sold it for $67,905, was returned back into the IRA. So after closing costs, $67,905 was the wire transfer back into her self-directed traditional IRA. She made a just over $14,000 net profit in under 6 months on that one individual transaction. So if I calculate the return on investment here, she made $14,197. And she invested all in $53,708. So that gives us a nearly a 28% return on investment. So she made over 28% on that transaction. If we annualize that, that's close to 60%. So she was able to buy, renovate, and resell additional properties within that same individual year. And it was interesting, when we interviewed Kay, we asked her, what sparked your interest? How'd you get involved? And obviously she had an interest in investing in real estate because she felt she could make a better rate of return than what she was investing in now in stocks, bonds, and mutual funds. In fact, and I'll quote her here, she said, "I no longer want the emotional sort of discourse of mutual funds and stocks going up and down." And she said that over the last 4 years, she's been able to make higher returns than she could have ever imagined in her self-directed IRA. So great transaction there. Again, she has done well over 20 real estate fix and flips, and she now has some rental properties in her Roth IRA. So that transitions me to her converting funds from her traditional IRA to her Roth IRA. So what she got to a point where she said, hey, I'm making significant returns. I'm making 20 to 30% return on investment on every transaction. Eventually, when I start drawing money out of the account after 59.5, I'm gonna have to pay taxes. And so instead of paying taxes when my crop is 15 feet high and 70 rows wide, I'd rather pay taxes when my stalk is maybe this high and 5 rows wide. So what she did is she started converting money from her traditional IRA over into her Roth IRA in order to then acquire properties with the new already taxed Roth IRA money. This is called a Roth conversion. We do have additional YouTube videos on the Roth conversion if you're interested in going a little bit more in depth into how a conversion from a traditional to Roth works. The concept here, philosophy for Kay was, hey, I don't want to ever have to pay taxes on this money, so I'd rather pay taxes now on the seed rather than paying it on the much larger crop. So she now has 5 cash flowing rental properties in her Roth IRA, and cumulatively on a monthly basis she has around $5,400 in net tax-free cash flow on an annual basis. So if we look at on a monthly basis, she has around $5,400. If we look at that on an annual basis, that's around $64,000 net tax-free cash flow on an annual basis. So every year, conceivably, being over the age of 59.5, should she choose to do this, she can distribute $64,000 and it'll never hit her 1040 as ordinary income taxes because it's in her Roth IRA. This is what we call, folks, compounding interest in the absence of taxation. For those of you that have watched my other YouTube videos or subscribers to our YouTube videos, you'll hear me say that a lot. Compounding interest in the absence of taxation. It's an incredibly powerful concept. All right, so last but not least, let's bring this full circle. How did she accomplish all of this using her self-directed IRA? Well, there's 3 steps in the process. It's important for you to understand these. Step number 1 is, of course, open and fund the self-directed IRA. Step 2 is direct your investment. And step 3 is manage the property, whether it's a rental or it's a fix and flip transaction. There's expenses that we're going to incur, contractors we have to pay, taxes, insurance, carrying costs, etc. How do we manage all of this? Well, Equity Trust Company has created a technology system. We call it MyEquity. It's proprietary to Equity Trust clients. It's an exclusive system that no other self-directed IRA custodian in the country offers. It's a system that allows you as a real estate investor to be able to quickly, seamlessly, and all digitally process your real estate investments from the comfort of your own home. So here's how it works in the case of Kay. Kay bought the property for $51,000. So she needed a $3,000 earnest money deposit at the time of making the offer. Now the offer is in the name of her Equity Trust IRA. Equity Trust Company Custodian, FBOs and for benefit of, Kay's name or account number, IRA. So there's no need to form an LLC or other type of entity. Her IRA acquires the property directly. It's easy and simple. So once her IRA makes the offer, her on behalf of the IRA signing the purchase contract, she then logs into her MyEquity online system and she requests a $3,000 earnest money deposit. Now this is all done digitally. There's no paperwork, there's no faxing, there's no scanning and emailing. She's giving Equity Trust the direction to send the $3,000 earnest money deposit out to secure that property. That money can be sent out via check or ACH direct deposit or wire transfer. So the system, the online digital system, allows you to process these transactions in a very, very short period of time. So once she got the property under contract, she at that point needed to close. So she went back into her online system. Digitally, she was able to upload a HUD-1 settlement statement, all of the necessary closing documents, and then Equity Trust provided to her a single point of contact investment liaison that was able to reach out to the title company and ultimately make sure that that transaction closed in a timely fashion. So now her IRA owns the $51,000 property. If you go to county records and you look at the deed will say Equity Trust Company Custodian, FBO, Kay's name or account number, IRA. Kay owns the property. Her IRA owns the property. So now she has $2,708 in repairs. There are multiple checks for general repairs to contractors, lawn maintenance, water, appliances, taxes, insurance. We have an online management system that Kay was able to access from the comfort of her own home. She didn't have to call Equity Trust. She didn't have to submit a document via fax or scan an email. She used our online virtual or digital checkbook, if you will. So she was able to log online and say, Equity Trust, make a check payable to this individual, send it to this address, or send it to my address, and I'll give it to that contractor. And we process those transactions within 24 to 40 hours. So very fast and easy and secure way to manage rental properties or fix and flip transactions in your self-directed IRA. Lastly, instead of sending a check out, Kay also has the option through the online portal to send out an ACH direct deposit. So you can imagine this, you're in your portal, you're with a contractor, they give you their account number and routing number, their banking information, you key it into the system, and then the money is zapped out of the self-directed IRA from your account directly to your contractor. So we have these technological capabilities for our clients. Kay is able to leverage these capabilities from the comfort of her own home 365 days a year, 24/7. Most importantly, all of the transactions in her account. She's done over 20 properties. So you can imagine there's a lot of checks going out. There's a lot of money coming back into the accounts. We have a record-keeping system. She can log into her account. She can export a spreadsheet or a file and import it to wherever she wants to make sure that she keeps very good records of all of the transactions in her self-directed IRA. So that's the three-step process. Open and fund the account, direct the investment, and then manage the investment using the technological tools afforded to you as an Equity Trust client. Last but not least, very, very important to understand that the first step for her was open and fund her account. It could take potentially 2 to 3 to upwards of 4 weeks to transfer a roll of your funds from another IRA firm or 401k provider. So it's very important that the account is set up and funded well in advance so you have money for an earnest money deposit and you can close quickly and efficiently on your very first real estate purchase. So congratulations to Kay for a job well done, making over $64,000 in net tax-free profit. She started flipping real estate, and now she owns a portfolio of rental properties in her Roth IRA. We look forward to seeing you on the next YouTube video.